Hey, Ivan, my man, it's so nice to have you on the show today. How are you doing?
Uh, Hi, Elijah, and thank you for inviting me. I'm doing well. How about
Beautiful.
you?
I'm doing quite fine, my man, and thank you so very much for being here. I truly appreciate it. And you see, Ivan, oftentimes I love to thank my guests for two things. And I do this so often to the point where it has become my anthem. So, firstly, I want to say thank you so very much, Ivan, for investing in yourself. You are on this platform right now because you did invested in yourself. And oftentimes, my man, I love to make reference to the amazing mango tree. Let's say some couple of months back, I was on a particular road, and just by the roadside, even there was this very tall, unattractive mango tree. And I use the word unattractive because the mango tree's got no mangoes on it, and the leaves were all dry. So I just walked past it and I went my way. But you see, even just recently, I was on that same road, and this time around, a lot's changed about the mango tree. The mango tree caught my attention pretty good from a distance, and immediately I got the urge to move so close to it, of which I did, and it wowed me because now the mango tree's got a lot of mangoes on it, beautiful green leaves and healthy branches. And not just mangoes now, Ivan, I'm talking about ripe mangoes. It was such a lovely moment that day. I was so excited. Here is my point. The fact that you dedicated your time, energy, and resources to becoming the amazing Ivan that you are today, that alone has made it really impossible for me to skip you. And that's why you got the request for me to be on the show because I was attracted to the fruits of all that you're doing, your philosophies, your insight, the impact your work is having, how you're offering your solutions. These stuffs are amazing. And just before you got the text from me, I said to myself, I've got to benefit from these beautiful things Ivan is doing. Not only me now, but even the audience. And here we are today with the amazing Ivan. So thank you so very much for doing that yourself. And secondly, thank you for saying yes to the invite. Because if you had said nope, there was nothing Elisha could do about it. Thank you so much, my man.
Thank you, Elisha. It's a pleasure to be here and speak to you.
Beautiful. So let's get started. You see, I'm quite excited to have you on the show today, Ivan, for two reasons. Firstly, my interest in knowledge seeking. I believe in order for one to transition from a terrible situation to that of a beautiful one, I believe it takes the application of knowledge, quality information, and not just knowledge now, but the application of it. And you see, even ever since I discovered that light in the Hebrew means knowledge and darkness means ignorance, I've been so keen to knowledge seeking because I do not want to remain in the dark. So that's going to make our conversation today very important to me and even to the listeners. The second reason why I'm excited to have the amazing Ivan on the show is for the sake of the audience. You see, we live in an age where information is as abundant as grains of sand. We've got lots of information flying out there. So these folks trust me for quality, eye-opening, and very important information, of which I am totally convinced that our conversation is going to be insightful, and impactful. So for that reason, my man, let's get started with your introduction. Talk to us about your personal or your professional journey, because right now we are so curious. We want to know how Ivan got here. Then afterwards, I've gotten some beautiful questions for you. Okay, Ivan, my man, over to you.
Thank you, Elijah, for as well the introduction. And so, keeping it short, I'm originally from Croatia. I lived in a couple of different countries in Europe, in Luxembourg, in Ireland, and now I live in Portugal. And throughout this journey, I was, of course, able to experience firsthand how it is like to live in those different countries. The costs, the local thinkings, opinions, vibe, and all these things. And one thing that stood out to me was just in general how hard it is for ordinary people to just live from day to day, from month to month, and how dependent people are actually on keeping their job, keeping their income steady, and how fragile actually an average household is. And I was thinking to myself, well, we live in 21st century in developed world. How is it that it's so hard for people to just live day by day? It should be much easier than it used to be 200 years ago. And of course, we cannot compare things with 200 years ago or 500 years ago because the technology changed a lot, right? So we enjoy the benefits of technology that we have today compared to our ancestors. But that's one thing. That's not what I'm talking about. I'm talking about why is it so hard for a person today to maybe buy an apartment or own a car, or why do so many people have to maybe work two jobs, two shifts instead of one, compared to, for example, people in United States or even in some other countries, decades earlier, because I think United States is the most famous country for having created a strong, powerful middle class that grew from the origins of liberty and right to pursue happiness. And so people then were actually overall much richer in those terms, if we disregard technology that was available to people then, than they are today. And so I started studying about economics and finance, and so this got me where I'm today.
Beautiful, beautiful. And I love your curiosity. And now look at the amazing impact your solution is offering. So I'm just going to begin first with this one, inflation. Why do you think everything is getting more expensive?
So it's, although they are trying to portray this as a big mystery in the media, especially mainstream media, and of course in political speeches, they usually tend to blame some external factors, maybe foreign leaders or foreign speculators or greedy capitalists or whatever they can point their finger at. And if they can't, they point their fingers into some imaginary internal threats. The reality is that the only way that everything can be more and more expensive overall is because of the increase in money supply. And so it is true that we can have some things suddenly more expensive than they were yesterday due to some economic shocks, right? So it can be that there is a war or there is a famine, and because of that, certain things go up in price temporarily, right? Until market finds its balance and restores supply. That's true. But what we are talking about here is how is it that in ordinary times in the economy, everything is growing more and more expensive, or at least in aggregate over the entire economy. And so the only possible explanation for that is the increase in money supply. Because you see, if the money supply would be steady, prices would continually keep falling because of improvement in production processes. If there would be some shock that would make one thing more expensive while the money supply is stable, then people would not have enough money to create also demand for other things. So that means if now they have to spend more money, for example, on their car, to buy their car, because, for example, car parts are now more expensive, that would leave people for less money to maybe go to the cinema or go to spend money in grocery stores. So they would spend maybe less money there. And so those goods would then have lower demand, and then the prices would have to fall on that side of things, even though the car price would rise simultaneously. But our problem is that we have constant increase in money supply. And so because of that, people now have money to spend on the increased car costs initially, and to continue buying other things such as groceries or go to the cinema. And so it is the money supply, the increase in money supply, that creates this additional demand across all goods and services simultaneously. And that is why all those prices keep rising, or they are not falling as much as otherwise they would have, right? So that is the key here to understand. And of course, not everyone benefits equally from this, because once you have the increase in money supply, then it's the first receivers of the new money, of the newly created money, the newly created currency, that benefit from it first. And then as this newly created currency trickles down through the economy, then the later receivers, they benefit less, because in the meantime, that demand creates pressure on prices. So the prices start rising after the first spending occurs. And then once those last in line get the newly created money, the prices have already risen. So those who receive that money last, they basically lost their purchasing power.
Oh boy, everything is deeply connected. I tell you, deeply connected. Wow. Okay, so I know this is a very funny question, but I would ask, what is money? Can you explain what money is?
It is not a funny question at all. It is a very good question. I'm afraid I don't have an easy and simple answer for it, in terms of, because what we grow up being taught to call something money, right? So when we are kids, we see, for example, United States dollar in paper form, or maybe in some digits, or digital euro, or paper yen, and so our parents call this money, so we start calling it money, and so we only think about it as money. But money really can take different forms. It is a tool that people invented through centuries to transact with each other. And in reality, money, so while money can have different forms, usually people come to the best form of money after some time. Something that has certain properties, which makes the good that we are exchanging easily transferable, and generally a good store of value, and hard to multiply as well, so that people can have confidence in it to transact in it and to save in it, right? And so the simple answer is that money can be many things, but traditionally, especially in the last 2000 years, it's been gold and silver and copper. And basically what happened is that people were transacting. You would have to find, especially in the old days, somebody who wants to buy your good. And so they had to find something that to get in return for that good. So if you were maybe creating plates for armor, and somebody else had horses, it was hard to transact with each other, because the person who sells horses would have to find somebody who wants their horse, and somebody who is creating those armor plates would have to find somebody who so it would be, this is the problem of double coincidence of wants, where you have to find simultaneously someone who wants your good to exchange. And so instead of that, people found something that everybody wants, and everybody wants to transact in it and to keep it. So something that everybody wants to use as a medium of exchange, right? And so this can be something like wheat, but of course, gold, for example, has better properties. So gold was found, and then silver and copper had different prices to each other, right? So that's how money would trade. That's the price of how the price of money would be created compared to other things, right? So because there is certain amount of gold, for example, it would trade in a certain ratio towards silver, because silver has its also demand and supply, right? And then those metals would trade in a certain amount towards armored plates or horses, based on supply and demand of those goods towards gold or silver. So this is how people found money, how free market found money without governments, and how people chose to transact. And then of course what happened later is that the governments entered the domain of money. They monopolized money, basically through usually by mandating certain coins to be used as a kingdom's or empire's currency. And so then that is what would be called money, right? Usually they give certain name to it. And so, for example, in Roman Empire, you had a currency called denarius. And so instead of saying maybe I have, 5 grams of gold, you would say I have X amount of denarius or denarii, right? So this is how people started calling something else money than what money really is. And so similarly, you had United States dollar that was worth 20. So one ounce of gold was 20 US dollars, meaning that one US dollar was worth 1/20th of an ounce of gold. So the dollar was good as gold, because when you owned a United States dollar, it was like as if you owned gold, because you could exchange that paper dollar for gold. And so this is then later where this boundary, let's say, where people got it confused, because people forgot that those paper currencies were not really money. They were just money substitutes, so that it was easier to transact with each other than carry maybe physical gold. Because remember, before then, people didn't have internet. They couldn't send digital confirmations of ownership to each other. So paper was easier to use, right? So this is a bit about money and what it is, and how we got to where we are today. So I have to say that I got the idea to write it after having explored a lot about economics, money, also finance and markets, and how I've realized that actually today's financial markets are very connected to the monetary system, to money itself. And so because the monetary system itself is managed centrally by the central banks and governments, because of that, there is big impact that happens in markets. And so I realized that everything is connected. I realized also that when we speak about money and inflation, we also speak about banking. We also speak about debt and debt cycles. And I think that to people it's very hard to connect all these things, especially, people are usually very busy with their daily lives. They don't even maybe know where to start, even if they would like to start somewhere. And so since I was I used to be told that I can explain well complex matters, I decided to take this challenge and maybe write a book that would connect all these topics that are seemingly unrelated at first glance, but that actually are very important in today's environment for people to understand, because we are nearing the end of big cycle in money, in debt, where basically you have a lot of debt, a lot of governments that are indebted, a lot of people in private sector that are indebted. And so there will be the need for more currency to be created to repay all those debts in the future. But the problem is that that currency has to be again loaned out to exist due to the nature of our system. And so the system is very fragile the way it is. And I think, so what I wanted to do is I wanted to write a book that is not very long, that is relatively short, that will help people quickly understand all those different concepts and what's going on, and a bit where they can start and how they can protect themselves. So that was the idea, that was the challenge, and I just decided to take it and to try to write such piece. So the title of the book is Making Money on the Money Printer, because the idea of the book is that because we have those centrally managed markets, effectively markets that are deeply distorted. So the subtitle is Ultimate Beginner's Guide for Investing in a Distorted Financial System. And so because the financial system is not free, we are not living in free markets, we are living in a deeply distorted system. It's distorted through money and the price of money, which are interest rates, which are centrally managed and deeply impacted by the actions of governments and central banks. And so my idea was, okay, because you have these distortions that create booms and busts, ups and downs, it was to explain to people how these booms and busts occur, what inflation means for them, and also what would be some of the strategies that people could use to protect themselves financially as well. Yeah, of course, everything that I'm talking about in the book is not from my own head. it's basically from the pieces of great economists and investors. So that's the idea. Sure. So the book is available on Amazon. So again, Making Money on the Money Printer, under my name, Ivan Pavlovic. And my advice to people would be to educate themselves. And I think that's contagious. Once you start, you really want to learn more and more. I wasn't reading much until about 5 years ago when I started, and then I just got very much into it in topics that I never thought would excite me that much. But and investing is not easy; it's hard. So I would advise people not to jump quickly and make big decisions easily. There is no one best investment out there, and people should educate themselves. And of course, if they can, consult professional advisors before they invest. But even if they can't, they should then first educate themselves. And you would be surprised, but even if you just dedicate sometimes half a year or 1 year, and you start by investing small amounts of money and everything, you can get big experience compared to not doing anything. And I think gaining some experience, starting small, starting easy, getting to know yourself, how you react to the markets and movements. Are you capable of sitting there and not looking at your investments and just waiting for even years and not do anything? That's very important. Or if you are somebody who panics easily and every day you have to look and log into your brokerage account several times, maybe that's not for you. So my advice to people would be get to know yourself and get to know markets through that knowledge. Thank you, Elisha. Thank you.